Well, joining me now for a closer look at Europe's tussle with debt and deficit is an economist who has more than 2 decades of experience. Klaus Baader, Chief European Economist for Societe Generale. Mr. Baader, thank you very much for joining us. We've just been hearing about all that deficit slashing, and we also heard Jean-Claude Trichet over the weekend saying that it was a good thing and that overall it would be good for consumers and good for growth. Is that your take on it?
Well, I think it is in the longer term. You know, there's no way that completely unsustainable public sector finances are going to lead us to prosperity. And yet at the same time, there is absolutely no doubt that reducing government deficits in the near term is going to weigh on domestic demand and it's going to slow the recovery. And I think you can actually see those kind of impacts right now in Europe very much. Look at those countries that have already started tightening policy, in particular France and, of course, Spain and Greece, where we see growth very sluggish. Germany, which of course this year is still enjoying a fiscal expansion, is showing very good growth. It's not just the export side. Fiscal policy is playing a role here as well. Right.
But if we look at a country like Ireland, also big austerity measures, and yet they've actually managed to claw their way out of recession. A little bit of green shoots there, perhaps.
Well, yes, but you know, the numbers are not quite as clear. You see, without making this terribly technical, there's a huge difference in Ireland between GDP and GNP, wherein GDP takes into consideration the remittances from companies who book their profits there. And if you look at GDP, that was actually still down. So I'd be very careful about the Irish example.
The other thing about Ireland is that it is having a lot of problems with its banks. It's still quite reliant on ECB lending, isn't it?
Massively so, yes. When I was looking last week at which banking sectors in regional perspective have experienced the biggest increases in recourse to ECB financing. And it was astonishing that while, of course, they are the usual suspects, the increase for Irish banks was just about the same order of magnitude as for Spanish banks. But think about the relative size. The Spanish economy and the Spanish banking sector is, of course, much bigger. So, yeah, Ireland is still exposed to these very large contingency risks because it had a massive banking sector.
Indeed. Now, the banks generally asked for less money in the ECB's 3-month offering. Is that something to be positive about?
Yes, I think so, to a certain extent. The take-up of ECB financing was indeed quite a lot lower than it was previously. It fell by about 170 billion. Now, we don't know the regional distribution, but it is a sign that the European banking sector isn't quite as strapped for liquidity as we thought it was. Yet, there's still about 175 billion in excess liquidity out there. That's a serious amount of money. And at least, though, I think it's the right conditions to keep money market rates very low for the foreseeable future.
Yeah, the interbank lending rate is also below 40 basis points. That is some cause for optimism, isn't it?
Yes, absolutely. It does make the overall monetary conditions very loose, although, you know, those banks that need the liquidity still getting them at 1% from the ECB rather than at 40 basis points. But yes.
And how concerned should we be about particularly Spain and also Greece at the moment? The pressure seems to have gone off slightly, but there is a concern, isn't there?
Yes, there is a concern. I think we should not throw Spain and Greece into the same pot.
Okay.
The problems are in a whole different league, really. Greece continues to be a country where the prospects for public sector finances remain highly uncertain. The risk of a restructuring of some form of credit event in Greece is definitely not banished. I think the risk in Spain is far lower. Frankly, at 200 basis points over Germany, I think Spain is probably more or less correctly priced. I think it looks pretty reasonable. Greece, there's still major questions whether they can really pull this consolidation effort off.
Okay. Mr. Baader, thank you very much indeed.